We got good stuff, and I'm serious. Really good content today. Really, really pleased with what we got to share with you. So stay tuned. And by the way, some shocking stats at the end. And I know it's a little bit of a teaser, but it's true. Let me show you what we're dealing with here, guys. So first and foremost, let's just cover this stuff. Look, it says down, but the reality is this. I took this last night before today came out. It says 514 last updated. Not true, but rates up a little bit this week, 6.5. They're up a lot in terms of just looking at the 10-year Treasury. So this is not good. This is up, right? Higher is bad. This is our rates typically follow this. Look at this last week, just higher and higher and higher and higher. And why is that? Remember last week we talked about oil and just how expensive it is and inflation. Well, guess what? Our boy Kevin, this is Kevin Warsh. He's replacing officially. He's official now. Today's, I think, his technical second day on the job, and maybe it's his third, but he got earlier this week was became official, but it was 56 to 54. Like the dude squeaked by coming in to take over Jerome Powell. And on the right side, so on the left, you see Mr. Boy Scout Kevin Warsh. He's now the guy in charge of determining where our rates go in the future, at least the Fed funds rate, what impacts all this stuff. And on the right side, you can see just the votes that it came out for past Fed chairs. So you can see all the different votes, but nothing has been this close. Even Janet Yellen, while she had the same amount of yays, she had a bunch of others. I don't know what others count for. So maybe just people didn't vote, didn't show up as a holiday. Who knows? But not widely well received, I guess, but we'll see. Here's his problem and our problem in the housing industry. Inflation's up. Inflation's in April jumped to 3.8. So for those that don't know, the Fed's trying to get a target somewhere between 2 and 3%. So when it goes up, they don't have a choice but to fight inflation. They have two mandates as the Fed. Number one, keep inflation low, and number two, keep unemployment low. Those are the two things they're trying to do. Is jobs and inflation are the two things they're primarily concerned with. And so with that, when inflation goes up, because oil is so freaking expensive, that's going to make them, unfortunately, maybe be forced to raise rates. So, welcome, Kevin. You got your job cut out for you. It is absolutely potentially going to be just a year of nothing. So, I don't think they're going to be cutting any rates anytime soon. And overall, they may be, raising rates if this sticks around for a long time. So here's something to kind of at least, as a good thing. And I didn't know this was even a thing that was measured, but apparently this chart shows the credit availability in terms of like lending standards, like how tight underwriting is or isn't. So you guys can see, just look at that graph when it was like super, super tight back in the 17, 18, 19, and it was, what a beatdown. I got to be honest, I lived through 19 and 20. I don't know what would have made that index drop so freaking much. But I do feel like credit standards today are pretty good. And based on this, we're at 100. Apparently, the benchmark is at 100, kind of being normal, I guess. We're at 108. So the good news, bad news is at least it's better than it once was. But I'm more throwing this out there because even as a guy that, in the industry, I had no idea there was a MCAI index that shows credit availability in terms of guidelines and tightness. It's not, what it is. But overall, rates, even though they've come up a little bit, and you guys can see the little blue line in there for the rates and where they are, even though we're getting close to that 6.6, we've kind of been in this range now for the last month or two. So again, the fact that purchase apps are up, that's a good thing. And this one I thought was interesting. So these are the housing payments, and it's more just an interesting chart. The red line, 2026, you can see obviously we're only through mid-April at this point. This was when this was data was taken, and we're lower for obvious reason that rates are lower, right? 2024, 2023, those are both higher. And well, I beg your pardon, 2025, 2024, we're both higher than this. 23, look, we knew this, right? We lived it when rates were 3 and went to 8. Look at that affordability, just that graph and how steep it was just in one freaking year. It's insane. So while I can say like, yes, affordability is tough, the good news is it's gotten better, and we'll see where rates take us here for the rest of this year. This one, home sold 43 days is the median. So this is a 4 week rolling average, right? And obviously, different markets mean different things, but you can see that right now, over the last 4 years, we are absolutely taking a little longer, 43 days, but just to put it in comparison, we're talking 10 days. Like look at April and May, 10 days. Like last year would have been somewhere mid 30s, let's say low to mid 30s. 10 whole days, guys. That's a week and a half. Not the end of the world. Yes, there's more, so it's taking a little longer, but a week and a half in the grand scheme of things, not the end of the world. Still great markets. All right, having some fun now. And this isn't fun if you live in Japan. Apparently, 13% of the homes in Japan are vacant. 13%, guys. That's like more than 1 out of every 10 is just sitting there with nobody in it. I thought that was amazing. And the fact that it is 10% of the US shocks me. Now, what I am curious about is if that includes like homes being built, meaning you can't live in them. So I don't know that. So, but still, just 1 in 13 or 13% rather in Japan is crazy to me. UK, there's 5% is vacant, which based on these numbers, let's assume that 8% is normal. I don't know if that's true or not, but I thought that was amazing. So with all that saying, that Japan's got 9 million empty homes, and some they're selling for like under 10 grand. I know Detroit was that way back in the day after the mortgage meltdown, so I don't know what a home in Detroit can go for now, but 10 grand for a home in Japan if you want it. And ultimately, apparently, because the population decline and things like that, people see older homes as a financial burden in Japan. So now, having said that, check this out. Americans, apparently, we like our older homes. And the median sales price of an older home is now higher than that of new build. And the reason why that's interesting, so let me say that again, homes that are already sitting there versus today, the new construction with today's dollars for lumber, today's dollars with inflation mixed in, today's dollars for higher wages than what would have been all this time ago, and all this other stuff. At the end of the day, existing homes are now, and it's not common, are now more expensive apparently than new construction. So what that tells me is that potentially, it makes sense in a good way that builders maybe are starting to crack the code and just buy more affordable homes. So that's how the positive spin is going to come on this. But I just thought that was really interesting and thought I'd share it with you. Product of the week. Got a lot of calls this week for zero down. There are payments, there are loans out there absolutely for zero down. We got some really good ones, even just for exclusively for people here in Texas. But certainly there's a lot of different things out there. So how much should you put down? A lot of it's going to be based on needs for what you need and want, but we do have options. I like this meme. This was funny. When you wake up and remember it's closing day. Love that. Love that image. That's hilarious. Good for that kid. And then I just want to give a shout out to Justin. We appreciate the shout out for the evidence of success this week. I'm sorry, Mariza. She's like, you don't pronounce the T. I'm like, okay, I'm trying. But she's been with us now for a few months. She's a processor that came on board and joined CMG, and we are just pumped to have her. She's awesome, and she's been a phenomenal addition to the team. So giving her a shout out as well. And as always, you know what to do: forward, share, subscribe, all that fun stuff that goes with it. And as always, we certainly appreciate you. If you need anything from us, you know how to get us. And remember, when you think mortgage, think Mark. Have a great weekend.